let's get more on the markets. I want to bring in David Kelly. He's the chief market strategist at JPMorgan Funds, a friend of the show. Usually David is joining us in the studio, but this time around we've kind of switched things around. David, just give us your take first on how all of this is going to play out in the markets, what's going on in Washington.
Well, I think the Washington story is beginning to fade here, because even with this super committee, we know that we're either going to get $1.5 trillion of deficit reduction in November, or we're going to get $1.2 trillion of further deficit reduction. So from a macroeconomic perspective, it's kind of baked in. The problem is that while this debate's been going on, it has had an impact on the economy. It has been, there is an uncertainty tax that is levied upon the American economy. All this uncertainty coming out of Washington caused people to freeze. I think that is one of the reasons why the ISM index came down so much yesterday, which triggered a fall. And we also got very weak GDP numbers last week, which shows very little momentum going into the second half of the year. So I think the market is now much more focused on the economy and looking at the damage done by all this vacillation in Washington.
Hey, David, it's Dominic here. One of the things that we want to talk about is, all of these dominoes are starting to fall here. GDP coming in lower, manufacturing coming in a little bit lower. How much of this goes up to that all-important jobs number coming up here? Because it's going to be big, right? I mean, this jobs number is more important than a couple of the ones we've had in the past.
No, I'm not an optimist on it. I mean, what we know is that in the first half of this year, the U.S. economy grew by 0.8%. Now, you need to have sustained growth of 1.5% even to produce positive payroll jobs. So, maybe we'll get a positive number on Friday, but I wouldn't be shocked if we got a negative one. And I don't see any strong job growth at all for the next few months until we get a little bit of momentum in terms of final demand.
So, David, I want to get a sense. Over the last, let's say, 2 or 3 weeks, have you changed your views in some way in how the markets are going to be, how they're going to end up by the end of the year? Are you pretty much where you've been at?
Well, I have to get a little bit more pessimistic given this revision downwards to GDP. I think the market has appropriately reflected that. The valuation numbers look great. The profit numbers look very good also. And if we get some momentum in the economy in the third quarter, then things could turn out better. But as the markets come down and as we've had weaker economic growth, I still think the market's going to go up from here between now and the end of the year. But we're at somewhat lower levels, and I think we're justifiably at lower levels today.
David, how much do earnings matter at this point, or is everything still focused so much on the big picture right now?
Well, I think earnings do matter a lot. I think we need, we know about past earnings, we even know about earnings projections for the rest of the year, but we do need to see some stronger economic growth. And the other question is, how much will these cuts actually eat into GDP growth over the next few years? And that still is a big unanswered question.
David, thank you very much.